I'm in the construction lending. A lot of you at Cold Climate Research are more geared towards building newer houses, building 6-star houses, 5-star plus houses, things that are going housing for essentially the future. Building for more modern places with much more amenities, smaller places that are much more, of course, energy efficient, alternative energy sources, off-grid houses. There's several different ways we can get off-grid houses essentially financed these days where we didn't have that before. Also, more unique houses. So, with a construction loan, our standard construction loan is a 25% down. Now, there's several different ways you can get that percentage down. One is essentially with funds. So hypothetically, you have a $400,000 construction budget for cost to build, and your basically overall appraisal is that $400,000. So if you have a $400,000 appraisal, $400,000 cost to build, your 25% into that project would essentially mean you would have to come up with $100,000 plus closing costs. A lot of times, first-time home buyers, people who are first-time builders, aren't going to have that 25%, but there are ways to make that up. One is, of course, having capital, just cash to be able to make that 25%. Other ways are essentially sweat equity. What have you done to that property? Is that land that you're building on? Is it do you own it free and clear? Has there been improvements to it? Has a driveway been put in? Has dirt work? Has the foundation been kind of plotted out on that property? Have you started that foundation? Typically in any type of new construction, that your 25% is down in that project is when that foundation is essentially in. So, people who go out there and are proactive in clearing that lot off, getting the property, kind of right there to the foundation. A lot of the times at that point, if you have that foundation and you're coming to us for a construction loan, we're just having you come in with closing costs. If you have possibly that foundation in and you have the septic, you have the electric there, you have all these other costs. Sometimes there's, you buy a piece of property and the electric's already there from a previous house. So that is right there is extra equity that, less of a construction budget overall that can be added into, the property. Was there a city lot and there was, water that's already there on property? Those are things that can be factored in to your, to lowering your construction budget and added to your, your percentage down. So in that, you can essentially, mitigate that initial cost. Now, depending on how much value there is when that appraisal comes in, we can sometimes, if there's a bunch of value in there and you've put a bunch of your own sweat equity, your own finances into that project, we can sometimes roll those closing costs even into the loan. So you're coming in with, relatively nothing at closing. That is a rare case, so we don't see that as often. So any type of construction loan, most construction loans are going to be a variable rate. They're usually based on prime plus 2. So prime right now, prime rate is 8.5. So essentially a construction loan right now would be 10.5%. They are variable rates. We do have ours capped. So hypothetical, the inflation starts rearing its ugly head again, and we go from 8.5. The Fed decides not to lower interest rates. They actually go up and go to 9%, then go to 10%. And if they go higher, essentially there is a cap. And so every construction loan, we have stress tested them to try to make sure that you can handle a higher basically payment when it goes to that long-term note. So you are capped at that 13.5, and there is a bottom tier as well at 5%. We've only seen, 5.25 is the lowest I've seen here, and that was pretty much in 2000, late 2020, basically when our interest rates were at the historical lows. A standard construction loan is 18 months. So you, as a owner builder, you do have an 18-month period to essentially build that house and essentially, term it out. So go into the long-term loan. So there are two sets of closing on basically a construction loan: the initial the initial construction loan, and then a long-term refinance. That's your conventional basically rate, which we had referred to earlier with Alaska Housing or Fannie Mae, US Bank. Just kind of depends on what backer is essentially the best to go forward with. Under a construction loan, it is an interest only loan, so you're only paying interest on the amounts you've drawn out. So you might have a $300,000 construction loan, but yet you've done all this work, you close the property out, you come in with your percentage, your 25%. Say you had to come in with $50,000 of your own capital. That capital, basically you're not paying interest on that 50,000. So that 50,000 is basically your draws are going to essentially out of that. You only start paying interest on the funds that you are essentially taking out from the bank at that point. So say your first draw basically is 50,000 and it goes immediately into the bank's funds. You're only paying interest on the amount you have essentially drawn out of that period of time. So your first payment it's compounded daily. So let's say it's on the 15th of next month, you to have your first draw. You're only paying interest from the 15th to that first of interest only. There isn't any principal payment. You don't typically start paying on the principal until you long-term the note or long-term the loan essentially. We do every construction loan, we do test, go out there and pre-qualify it essentially with a conventional note, usually a little bit higher than the current market rate, just to make sure that you're able to handle that payment. And that goes into that 43% debt to income ratio that we do tend to like to see, or lower when we, finance a house or refinance. So there are sets of building codes. So here in the city, there are building codes here at the Fairbanks North Star Borough. There's not necessarily, the city does have building codes. The borough will follow the state codes. So there's not like inside the city where you do have to work with the city to meet their building codes. So you'd be working with the building, building and planning. And I do know that Marty was the main person over there for many years. And so he, one of those people will have to go to your property, make sure that you're building to Alaska Housing standards, that your mechanical, your electrical, your plumbing, all these things meet the building codes here in Fairbanks. There are state building codes, but there isn't anybody who really enforces them. There was a push by the IABA, the Builders Association, to try to put in some basic building codes by following Alaska Housing's, which all Alaska Housing's building codes just basically follows the state codes. It does seem like those building codes were going to go through after a recent IAB meeting. It sounds like they're actually not going to go through. So there's nobody out there going out and essentially inspecting that house as a, to make sure you're meeting the codes that are required for your snow load, your foundation. Now it's really easy to get the the codes books. There's basic code books for building standards. I do know Bernard sells them, but you can also find them on that link that's there in the center for building codes here in Alaska. Now, granted, there are a little bit of differences in building codes for a southern portion of Alaska versus here in Fairbanks. The snow loads for Valdez would be completely different than the snow loads here in the interior. So Alaska Housing does have its own set of basically, codes, which pretty much does follow the state codes as far as, building. Let's see here. And they do that through their PURs. So essentially here locally, you would hire an engineer in the beginning if you're building outside of the city to inspect it at different periods of time to make sure that you're building to code. And that's what those PUR 102 is for. So, so you're meeting your foundation, checking that off, meeting your electrical, checking that off. And so a person like Terry Dzinski or Lynn Cool would be going out there and at different portions and signing off that these you've met the essentially building codes. Here in the interior, there are, especially inside the city, a lot of housing that is in a state of disrepair. Everybody sees this great deal. They immediately, want to see the place. They want to make an offer. And as the process of them going through, they find out that the foundation has moved, the septic system failed, the roof is leaking. It's extremely common for people to be selling as is and not the seller not wanting to do any repairs. And so that's, the contract will usually say as is, and then the new buyer will essentially have to take over any type of repairs on that property. So Alaska Housing Renovation is a good loan for that renovation of a property. Now, granted, you are restricted on some of the time frame. So you are restricted to about 5 months of a period of time to essentially finish. And it does say 4 months. And the reason why is because we do want time for that appraiser to go out there, do the final appraisal, and essentially ship it out. We can technically do it in 5 months, but a lot of times we're pushing it in that last month to basically have everything done. So we would like Alaska Housing Rehab Program, the project to be done in less than 4 months. There are some costs. They typically don't want to go higher than 75%, max budget of 75% or 75,000. That can be kind of reviewed and everything go higher, but typically there is some kind of, not necessarily restrictions, but we do, $75,000 rehabilitation. At that point is kind of going into more of a construction loan. So your roof replacement is going to be most definitely less than 75,000. Your if it's a foundation issue, most foundations are going to be a construction loan because it's going to take a lot more time than that 4-month period of time. If this is just a overhaul, taking it from a 70s house into a modern house, you typically can probably do that in that $75,000 range and possibly less than a 4-month period. It just kind of depends on how much has to be done and essentially the contractor as well. Any type of basically renovation, like a construction loan, we are going to require a construction budget to know your overall cost. So if your renovations is $60,000, it'll have a breakdown of where you're putting those funds. So into a bathroom, $8,000, into a kitchen, $15,000, painting, mud and texture, $5,000. So we know essentially the breakdown of where those funds are being basically distributed throughout the house. In any type of renovation or construction loan, we will have you essentially turning in invoices and receipts. So you would be paying in the sense of receipts, you're going out purchasing materials and then turning it back into us. Or if the contractor's doing it, that contractors going out there buying those materials and then giving you invoices where you turn it back into Mount McKinley Bank. There are rules for Alaska Housing on manufactured homes. It's getting harder and harder to essentially finance manufactured homes, but there is shorter periods of time that you can purchase a manufactured home. Most manufactured homes are from the 70s and have kind of outlived their projected time frame. So in this, we can qualify manufactured homes, but it is really hard to do purchasing a manufactured.